Today's interview is a little special, as Leo, our FTMO trader from Portugal, used to be my colleague and worked for FTMO as well. Now he is a successful FTMO trader and received $200,000 in rewards in total.
New York starts, we have a stop hunt there, and then we go short.
Join me and let's see the breakdown of Leo's unique strategy. Enjoy. Hey Leo, how are you, man?
I'm doing great, man. Thank you for being here. And yeah, let's go for this. Looking forward to another amazing interview.
Awesome. So by the way, for those of you who might be watching us for the first time, FTMO is a modern prop trading firm, and we're looking for clients who we can provide FTMO accounts with up to $200,000 in fictitious capital. So Leo here, you've been trading with us for quite a while. I think you started back in 2020, right? So it's going to be 5 years.
Yeah, exactly. About during the COVID-19.
Okay. So tell us a bit about the story, how you started trading. Like, have you started like even before that, before you're trading with FTMO, have you tried a live account, or how does the story go?
Yeah, so basically I started in 2019. Basically how many people start was with the signals group and a lot of scammers and influencers trying to put you in groups. So I started with that, not demo trading, already on live accounts. So I got into trading because growing up, I was a regular kid with big dreams, big goals. So I never followed the regular path. I left high school, never went to college because I want to put money working for me. So I got the job. I was a door-to-door salesman. And as soon as I got saved up some money, I started looking for ways to invest money, and I stumbled across trading, basically.
Okay. So there's one very special thing that I think we should mention, and that is, which is really cool, that we actually used to be colleagues. You used to work at FTMO, you used to work with me. So you've been in our company for like 4 years, something like that. And you left, I think, last year, right? Because you were already trading, because you were already making money trading with FTMO. So that's super unique. So how long did it take to you to actually start seeing success in trading? Usually it takes several years.
So yeah, it took me like, I started in 2019, as I told. And basically, once I started being profitable was when I got my first payout in FTMO was March 2023, when I was already, you guys, employee. So yeah, basically 4 years around that. But it wasn't about the strategy, because I have this strategy from 2020, 2021. It was about the mindset, because the psychology is everything in trading, and people have a big ego, and sometimes they can take the blame that trading isn't working because of the strategy, but because of their mindsets.
Okay. Well, we're going to talk more about the psychology later, but what I'm interested in, you said it was about the mindset. So were you just like risking too much? Because that is something we see very often. I saw it with me as well. So was that the thing, or was it anything else? Was it something else?
It was, man, you can name every error. I did everything. You can name every mistake from, so basically everything goes from having less capital, having no capital, because if you want to make money in trading, you need capital. You can take like $100, $500 and make it big. So I did a lot of over leveraging, over exposure, revenge trading, everything, you name it.
Okay. And so it took you like these 3-4 years to really, you know, realize that you're making all these mistakes and gradually erase them. And that's when you started being profitable. Okay.
Yeah, you have to hit rock bottom. Sometimes the life could go up. Sometimes in trading, you are only going to make it when you have only $1 left. You understand me? So you are like, yeah, man, this is it. I have to make it this time. No excuses. Because sometimes, you know, you have a proven strategy, you know, it works, but you come across these errors, these mistakes that you don't learn. You have to really go rock bottom to know, yeah, I have to change. This has to start working, you know.
Okay, so it was like a real roller coaster, this whole trading journey. Like it wasn't only getting better. There were some hard falls.
No. Exactly, yeah, hard falls. And when you think, yeah, I know it, done. It's gonna work out. No, man, yeah.
The market tumbled.
Exactly. The market tumbles you real quick.
Okay. I've been looking at your FTMO accounts and I noticed that you are focused primarily only at one symbol, right? You trade mostly GBP So why is that? Why is it so special to you?
Man, this I tried mostly in the beginning the pounds because I like pounds. They are very volatile, and in the markets, if you don't have volatility, you can't make money. So I started with pounds. I also had another pairs, but looking at my trading journal, my statistics, I was like, let me see my most profitable pair, and I found out it was GBPUSD. And if you cannot be consistent with one pair, you are not going to be consistent with 2, 3, whatever. So you have to start with only one. It depends also on your strategy, because since I'm a day trader, one pair is enough.
Mm-hmm. Yeah, that's actually what I was about to ask. If it's enough for you to trade just like one pair, because you see like some other traders are just focusing or several pairs at the same time, but then here you are with trading just GU and still you're seeing massive success. I think what I should mention here is that the total payout you receive from FTMO is around $200,000, right? Maybe a little more than that. So that's really impressive. Okay.
Thanks, nice.
So it makes sense. While it works, there's no reason to change that.
Exactly.
So are you just looking at pure price action, or are you using some indicators as well?
No, pure price action. The only indicator I use is to know the timings of the sessions, London session, your session, etc. But pure as price action, I don't even use fundamentals. I only avoid big impact news like FOMC, NFP, CPI, and that's it.
Yeah, it's better to stay out during these events. That's for sure.
Yeah, exactly.
Okay. The strategy, you said you had it from the beginning, the same. Has this strategy really been the same from the beginning, and the only thing you really had to work on was the mindset, or have you made some changes, some little improvements to the strategy along the journey as well?
Okay, that's a really nice question. So basically, the fundamental of the strategy is always the same, but you can trade it in many ways. You have like you can do it in many ways. For example, details, but I have took the strategy, I backtested a lot and saw the way it worked better for me and stick to it. Yeah. And the rest was mindset.
Backtesting, that's important thing. How did you backtest the strategy?
So yeah, backtest for me, I think was the key point. Also struggling with my emotion, and I see lots of traders failing with that, because they jump right in the live market, and that cannot happen. You have to backtest the strategy. So I just go to trending view, go back, with the replay button. I pick, bro, literally I have like around 10 years or more in backtest on my archives on Google Sheets, detailed, saying why did I pick the trade, why did I enter, why did I exit. So you have to know in the long term the statistics and probabilities of the trade. So your mindset, your subconscious can trust the plan.
Okay.
So yeah, that's it.
Yeah, so there's really a lot of hard work actually behind the results.
Yeah,
because I imagine
exactly.
the backtesting really, takes probably a lot of time to do it properly.
Exactly. And people think trading is live trading, but not. In live trading, you just apply what you already worked, on the backstage. For me, trading is what happens in the backstage.
Okay, that's really
important.
That's really cool to hear. So basically, the actual trading is just like the tip of the iceberg. Like most of the work happens on the backtesting.
Yeah, exactly.
Okay.
Live trading needs to be boring and easy. You just place the trading, close the computer.
Cool. Okay, well, Leo, thank you for the introduction. And well, let's move on to the charts and let's see how you trade exactly. Right from the top, I can see that you have an indicator that is dividing the sessions, right? I guess that's not what we're seeing.
Yeah, exactly. I basically trade only the first 3 hours of the London and the New York session. That's what I like to focus on.
Is it because of the volatility that tends to be the highest at the time?
Yes, exactly. Because of the volatility, and that's when the market is happening and when the big players are coming on the screen as well.
All right. Well, if you don't mind, then just go ahead and show us how you trade.
Yeah, of course. So basically, I started the day here in London session. I like to take a look at what happened before. So I took, I saw, I also, I always, I liked the high of the day, high of previous sessions. So starting London, I highlight the high of the day, which is the high of the Asia chess session, and the low of the day. So what I look here, so let's say starting London, what I look here is I always look for threats and stop hunts, because the market to move direction, they need first to trap people, mislead them, stop them out, and then go into the direction. Because you see a lot of traders saying, "Oh man, my stop loss was it by 1 pip, 2 pips, and then the market went straight
Yeah.
to my take profit." Yeah,
It
because
just
the market
grabs the
works.
liquidity, just quickly goes, kills the trade,
Yeah,
but this
yeah,
goes to the other
yeah.
direction. Yeah. Yeah, we know that.
Exactly. The market, yeah, we all been that. So the market is always like that. They stop people out, they grab liquidity wherever. So I start the day. So I follow my principle: buy low, sell high, always. So I need to sell the high of the day and buy the low of the day. So here we are close to the high of the day. So I'm looking to stop this. So as soon as we have stopped the high of the day, I look for my reversal pattern, which is basically the double top. So I have it, I have my break and retest. And after that, you have to think, okay, basically, after stopping these people out, which are making money here. So people who are buying, if we want to sell, we have to first stop the sellers. So what we did, we stopped the people who were making money here selling. After stopping them, you see a lot of people think you see the breakout and retest. So I'm thinking, no, I'm going to sell this. So I wait for the pattern, and after that, I think, okay, where are we going to go now? So I see we have the low of the day to stop out, which is the Asia low. It's interesting because Asia for me, it's a big must, because I've backtested a lot, like 2 years of backtest. I noticed that basically 80% of all the Asia session is stopped out, both extremes, both swing high and swing low. So I use that in my favor. So once I stop out the Asia swing high, I'm looking to short at the Asia swing low. So we can see we have that movement here. And once we hit the low of the day, we start New York session, and I'm already looking for buys, So I'm looking for my pattern to buy, which is the double bottom. In this case, also happened. We had a break the retest, and we went again to the high of the day. This is basically free-for-all game, we have to think, okay, where are the stop loss? Where are we going next? Who are we going to stop next? I have some trades here. I can showcase them for you here in backtest.
That's actually what I was about to ask about the stop losses, because I think it's pretty easy to see how you determine which way is the market going to go, the way you think the market's going to go. But the stop losses, so do you have like some fixed amount? Like, is it always the same reward to risk ratio, or how do you determine the stop loss?
Okay, regarding that, my stop loss is if I'm buying the low, my stop loss needs to cover the low of the day. For example, here I'm entering on this double bottom pattern after this break and the retest of the neckline. So my stop needs to be protecting the low of the day. And the targets, I like to use this ferment here, which is basically 3 times. I see 3 times the pattern, and that's basically my take profit. In this case, it was almost 3%, but I put on the high of the day because we still had the Asia high to go for it.
Okay.
And yeah, once we hit the Asia high, we are trading the New York session. I basically look, okay, we are on the high of the day. Let's look out for false breakouts. A lot of people, I like to go against big candles, because big candles mislead people into that direction. You see a big bullish candle here, breaking the high of the day. Man, I'm telling you, millions of people are trying to buy this breakout.
So you're seeing the big candles mostly as traps.
Exactly. Big candles, big wicks, pin bars. For example, we have this break here, and then a lot of people see this. Sorry. See these weak rejections as a signal to buy, you know.
Mm-hmm.
As well, I'm looking for my pattern to sell, which happened here. Neckline, break, retest, and let's go for it. So I tried to think, okay, what are most people thinking of doing here? You know, what are most retails doing here? Because it's not surprising that 90% or more of retail traders lose, because the market makes it that way, you know. The market makers, you know, big institutions think, okay, what are most people going to do here, you know, and go on the opposite direction. So I tried to think opposite of the retail traders, you know.
Mm-hmm. Yeah, I just was exactly thinking about this, that this is something that you're essentially doing, you know. So just thinking of what is the classic retail gonna do, and just do the opposite. And as you said, you know, it's a known fact that most of the people lose money while trading. So, you know, if you're just gonna do the opposite, you're gonna be the one making the money.
Yeah, exactly. Because if you are making money, for you to make money, people have to lose money.
Yeah.
And if you are losing money, it means other people are making money, if that makes sense for you. So yeah, look for traps, stop hunts. For example, here it was a loss, but it happens, you know. Here, what I see, maybe because of this, a lot of rejections, you know. Start of long session, we see a lot of wicks, bearish engulfings. Okay, a lot of people are shorting this, but before we short this, there is going to be a stop hunt. We have a big stop hunt, which calls people to enter also at this breakout to buy. But for me, this is going to be a reversal. Didn't happen. Okay. So this was my entry here, my setup. It didn't happen this time. Of course, it's probabilities. So yeah, it basically goes around that. I see traps, stop hunts. I try to go against the retail traders. For example, we are trading here London session. We see market rejection the highs. We have the Asian high here. A lot of people are shorting already here because of this big wick. If you say, oh, big wick, big rejection, but no. Straight away, we have the stop hunt movements here. At the top, we have my double top pattern. So we target the low of the day, which is the Asia low. Yeah, basically that's it.
Mm-hmm.
It's basically things set up almost every day, you know, always looking for the same stuff.
Yeah, I was about to ask because you said you're trading mostly 3 hours in the London and 3 hours in the US session. So if you just don't see any opportunity, let's say the volatility is low and the market just goes sideways, you just don't trade, or you try to maybe trade a little bit later towards the end of the US session, or you just like, okay, today is not the day, I don't see anything, I'm just not gonna trade.
No, I just don't trade because if the opportunity is done there, I don't force it. Because also what happened to me, if I force a trade into the white windows you see here, man, most of the times stop loss for sure. Because what happens a lot of times is the market is going to give patterns, especially here between London and New York session. Here are going to be most of the traps and stop hunts. A lot of the times setups are going to be here, bearish engulfing, pin bars, wherever to short. And as soon as New York starts, we have a stop hunt there, and then we go short. So basically, yeah, the first hour of every session for me is going to be a trap or stop hunt. So I try to trade mostly on the second or third hour of the session. Yeah.
Okay. Yeah, that's really valuable information. And by the way, I've noticed that this whole time we are on the 15-minute time frame. So are you using 15-minute time frame to do the analysis, or do you do some top-down analysis going from like 4 hour to 1 hour, or how do you do it?
Yeah, for me, simplicity is key. I only stick to one time frame. Why? Because I already tried many time frames, backtest a lot. And also I'm a day trader, so I use lower time frames. For me, 15 minutes, it's what works the best. Gives me the perfect amount of setups. I tried already last year 5 minute setups, it also works, yeah, but it gives a lot of fixed setups, you know. So I try to stick with 15 minutes only. For me, it's enough. And if it's working, why try another? You know?
Okay. All right. Good. That's actually one important thing we didn't mention, and that is you said you are a day trader. So that means ideally you want to close your trades before the market roll over. You don't usually hold the trades overnight.
Yeah, ideally, I like the trade to be closed within the same day. But if the market has to roll over and I need to hold the trade, I'll do it. But yeah, I try to hold it for like 1, maximum 2 days. Yeah.
Okay, perfect. Now, off recording, while we were talking, you said something really interesting, and that is, I'm just gonna come back to the backtesting. You said you like to compare trading to sports, to football, and that is you gotta practice one kick 1,000 times, and that the trading itself is just boring, but all the work is done in the backtesting, which is like 90%. And so you said you would be willing to show some of your backtests. So could you show us how do you do the backtesting? Your Google
Yeah, of course. So basically, for me, backtest was my key factor for my advantage in trading, because many people just want to go into trading, go big, and they forget that trading, the work happens behind the curtains, behind the stage. As you said, I mentioned it earlier. It's like I like to compare this as football. Any sports with high performance, you know, for you to go play on the game, you have to already train the kick thousands of times, so be perfect during the game. Trading the same, when you are executing a trade, you have already to practice it thousands of times, so the execution is flawless. So yeah, what I can show here is some of the back test I did. Basically, it's like this. Yeah, I put the month, the trades. Yeah, I go back I use the replay button, I go back in time. Yeah, I'm going to do back test the previous 6 months. Let's go. And I do like this. Yeah, basically the day of the setup, pair, which is also the same. And you see, this is normal. People start trading. If they come across this month, they stop trading. They say, okay, I need to change the strategy, because if they don't have back test, they don't know if the strategy works on the long term. And when people have a month like this, they just quit. Okay, yeah, I need to change the strategy. I need to tweak this. Oh, but as you can see, after the next month, it's positive. The next hour already positive as well. You need to stick to the strategy, because when you backtest it, you know that in long term, you are safe. The probabilities will play out in your favor. So I also have this here. You can see I have a lot of backtest. This was around 2019. Yeah. Yeah, I was backtesting. I also choose Gbpusd because of the backtest as well. It was my best performance pair. Yeah, man, goes. Yeah. And then I also have this. This is basically probabilities that can, characteristics of a trade that can increase the probability of the TP. For example, here is a strong opening of sessions. Let's say a strong opening of the session, big candle, telling people to short this breakout, and I'm looking to long it already. This makes probabilities against me. Characteristics that reduce the probability of the TP, basically basic rejections, like you see here, is a basic rejection of the high of the day. Wicks, I like to see breaks, because when the candle break a line, it's calling people to buy it. So it's misleading people, and when the market is misleading people, you know that it can go on the opposite way. I also like to do statistics of losses. So this was some years ago, 2021. Yeah. So I took all the losses and I see the statistics. If it was a loss because it was only a loss, or if it was an error, you know? And I saw that at that time, most of my losses were errors of my part. I was trading pairs. I didn't trade. I was counter trading. I was trading outside of trading hours, for example, this, you know? So yeah, man, you really have to put in the work, man. You have to put in the work and see if you are following the plan, if you are optimizing your strategy, because you have to be, trading is an ongoing process. People think, yeah, I know the strategy, I'm done. No, trading, even if you master your strategy, it's an ongoing work, because you have to work every day on your performance to be always on your peak performance and execute flawlessly your strategy every day.
Okay. By the way, when you were mentioning you write down if it was a loss or an error, you mean the error like it was your own mistake that you did some.
Exactly.
Okay, so you just saying if it's like the mistake on the side of the strategy or if it's like your own problem that you went in with too big of a position or you traded outside of the normal trading.
Exactly. If you are faulty or not in the strategy, if it was your fault, basically, not fault of the strategy. Because losses happen and there are months and months, there are months the strategy will perform less better and that's okay, yeah.
Okay, perfect. Yeah, I think this really shows that, and I think this is for the first time we've seen something like this in our interview, and that there really is a lot of hard work behind the results. And if you want to be long-term profitable, and you know, which you are, we mentioned that you received over $200,000 in payouts. You really gotta put in the work, and I really like this because I think this really promotes, you know, the healthy work ethic that the traders really should have. So yeah, thank you for that. And yeah, let's just move on to the account matrix now for a few minutes. Our Discord server has recently reached 80,000 members. Join us as well and stay in touch with the latest FTMO news. All right, here in the account matrix, and Leo, you said you think this was your best result so far, right, on a single FTMO account. So this is a $400,000 FTMO account swing, and you made a total profit on this one over $100,000 on one account. So that's really impressive. We can see you barely went to a loss. You pretty much just went only up. The consistency score is also very high, which with a result like this is really unheard of, right? Because when we have traders who make a lot of money on one FTMO account, usually it's like a few lucky trades. But in your case, the consistency is there as well. So really well done. Now, if you could just scroll down a little bit, let's see the stats. Yeah, man. So maximum daily loss to 3%. So you were not even close to breaking that. So that's really nice. Now, if you could go further down, yeah, let's see the other stats. Reward to risk 3.5, super high. Win rate lower than 50, but you know, as long as the reward to risk ratio is high, you don't really care. Yeah. So, and it's all been done on GU, right? I see some GJ as well, some GBP, JPY.
Yeah, 1 or 2 trades.
Okay, cool.
But yeah, if I'll stick to GU, I'll probably make more money.
Okay, now let's just go. Let's just go to the bottom, and let's see the final stats we have there. Yeah. Okay. So mostly selling. Is that something that you tend to do, that you would see that you have better results when selling or when buying, or it's really just the way the market goes and you don't really care if you buy or sell?
Yeah, exactly. It was, I think, only this month. For me, it's random. I don't care if the market is doing up or going down. For me, it's okay. I'm a day trader. For me, what matters is the move of the day, basically, of the session. So yeah, I think this was kind of random. Yeah, I don't care if it's a buy or sell. For me, it works either ways.
Okay, cool. Okay, Leo, thanks again. And now let's just go to the final part of the interview and talk about what you said was really important, and that is the psychology. If you enjoy our videos, then please subscribe to the FTMO YouTube channel for more videos just like this. Psychology, a very important part of trading, and something, Leo, you said you've been working on for quite a lot of years. So you said you know, anything that's wrong, you did it. So you had, you know, you've been through everything when it comes to the mistakes, to the errors on the psychology side. Is there something that is still like an obstacle to you, something that you really, that you know you got to be careful about it, that you know that you have tendency to make this error or that?
For now, maybe sometimes impatience, yeah, because I only trade one pair, and then there are days that I don't have setups, which is normal, but sometimes I'm impatient, so I don't know, sometimes I look at other pairs, which is an error, and what I do to fight that is I just close the computer and do random stuff.
Okay. I think when I'm thinking about it, what probably really helps a lot is the fact that you have all those back tests, right? Because you know that your decision is based on data. You know that you're not just randomly trading. And if you have this confidence, if you have all these back tests, then I guess the trading is really much easier on the psychology.
Yeah, exactly. When you have like a data-based strategy, you know that the probabilities works in your favor. You just need to follow your strategy that in a long term, the probabilities will take care of you. So you don't need to care about the results of a trade. That's a big error of many people. They marry a trade. They think it's kind of contradictory because in trading, it goes against the human nature. In trading, in order to have success, you have to detach yourself from the results of a single trade, because the result of a single trade doesn't matter at all for nothing.
Mm-hmm.
Because what matters is like, I like to trade in sample sizes, because I don't care if this trade is going to stop loss or the next one or the next one. I care only about like 20, 30 sample size trades, because that's like the minimum amount size of trades you need to let the probabilities play in your favor,
Mm-hmm. Okay. So you're saying that a lot of people are trading their strategy and one or two trades don't work out and they like, already start to panic and they think like something's wrong and they try to change the strategy.
Yeah, exactly. Basically. So there's a quote. It goes like this: your biggest losing streak is yet to come. So that makes you think. So even if you're trading your strategy, there are going to be losing streaks, and people have their ego so big they can't accept a loss. They can't accept the risk. Maybe sometimes because they need the money, it's like rent money, gas money, money to pay the bills, and the market doesn't care if you need that money. So you have to detach yourself from the money. You only have to see, like, I like to see in percentage, not in numbers. So one trick is I avoid to be on MetaTrader. I never go to MetaTrader. I only go there to place the trade and that's it. I never go. Because if you are MetaTrading, you are seeing the money of the trade. You are seeing your account balance. And that's the big error, because you see money, and trading, you have to think it's nothing related to money. Of course it is, but you have to take the money out of the equation. So one thing I like to think is, I like to look at this like the casino. Yeah, I like to compare it like the casino. You have to think like the odds to win. So the casino works, they have the probabilistic edge in their favor. For example, the roulette. You think that it's 50-50, black and red, but it's not, because you have one green.
Yeah.
And that green gives the edge to the casino. And the probabilities of the casino win is like 51. That's only green slots that makes them in like long-term sample size of roulettes. They know they're gonna win. They don't look at any hand or any play. Oh my God, I lost money here to that guy. I lost money there, lost money there. No, the casino lets the probabilities play in their favor. They don't care if they lose one hand or two, whatever. They know they have the hedge. The probabilities play in their favor in a long term. So they just play the strategy basically in a long term. They know that the end of every month, 2 months, 3 months, wherever, they're gonna have the money in their pockets. And trading, I like to get that way.
That's really interesting, man. I mean, this comparison to the roulette, I never thought about it that way, but you're right. Essentially, everybody's thinking, okay, it's either red or black. It's 50-50, but exactly the fact that there's just this one green in the long term,
It changes everything.
it gives it changes the opportunity to the side of the casino. That's a very good point. Yeah. And also when you were mentioning that you don't really like to look into the trading platform, you don't want to see the money. Is that something that you've been doing for like quite some time, or something that you realized a bit later that it actually helps you if you're not thinking about it, that's money?
Yeah, so I realized a bit later that the less I look at the screen or the plating or the trading platform, the more money I make. So even during the live trading, as soon I like to put alarms in the high of the day and low of the day. When the price goes there, I look at the setup. I try to see my setup, and as soon as I have my setup, I put the buy limit. I don't even like to enter market is the question. I like buy and stop limits. Sorry, buy and sell limits. So once I put the buy and sell limits, that's it. I'm done. I close the computer. I go do a run and stuff. And I don't even manage the trade basically, because a lot of people, they lose because they manage the trade. They think, okay, yeah, how can I make more money this? How can I reduce the risk. That's an error because you don't do that during your backtest. When you are doing your backtest, you just place the trade, you forward to the next candles. You have to do the same live trading. You can't forward, but you can close the computer and do random stuff and don't think about it.
Yeah, because I think. Yeah, go ahead.
Yeah. No, I was just going to say, because if you've done your backtest well, you know, the probabilities will go in favor that you just can trust the trade and let it go, either take profit or stop loss.
I think the managing of the trade usually is derived from emotions, right? You open up the trade, you know, you set the stop loss, and you all of a sudden see the market is going like strongly against you, right? So what you do, you move the stop loss, or you see that it's going really, really in your favor, so you add another position. And like those decisions are, you know, not informative decisions based on backtesting. They are based on your emotions, that you see that the chart is doing something and you're reacting to it. And essentially in the long term, it's probably not the right thing to do.
Yeah, exactly, man. That's it. Basically, you have to trade against the human nature. Another thing I like to think is people think that the technical analysis can reduce the risk of a trade. It cannot. People think, okay, if I have a great analysis, if I take a lot of confluences, okay, I have better probabilities of this particular trade going in my favor. And that doesn't happen. No one in the world knows what is going to happen on the market on the next trade. No one. So when you are entering the market, you see people, they think they accept the risk, but they don't. And I like to see, like, compare it to slot machines. If we see people playing slot machines at the casino, you can see them for hours losing the money, and they don't care. They just put the money, press the machine, and they hope they are going to get a win. Because they are accepting the risk before playing. They have to put the money on the machine. They have to put the coin, bills, wherever, to press. In trading, it's not like that. In trading, you only lose the money if it hits your stop loss. So it gives like a false perspective that you can avoid the risk. That doesn't happen.
Okay, I see. Okay, cool. Well, Leo, thanks again for being here today. I gotta say, I really enjoyed today's interview. I think we've seen a lot of things that haven't been said here before. So I think there's really a lot of value in it. And before we say goodbye, if there's anything you want to say, if you want to give a shout out to anyone, if you want to give any advice to somebody, if you want to say anything, now's your time to do it.
Yeah, man. So I want to say thank you so much to you, to Ftmo, which is basically Ftmo was a big inside in my life. As you know, I also worked with you guys as customer support, and that was a turning point because it helped me conciliate the trading and working at the same time. And I always was investing my first salaries on Ftmo. I was also investing them on prop firms challenges. Like go big or go home, you know, and that helped me a lot. And yeah, it's funny to think, like, I remember when I started trading, like around 2020, I saw this particular trading on Ftmo having an interview with you guys that you made around 100K in a month. I mean, I look at that like, how is that possible? I can't imagine doing that, man. And fast forward 5 years, we are here. Yeah, we are here. I'm that guy. The guy I admired 5 years ago. I'm now that guy. So final words. I want to say, people, to work hard. If you want to make it in trading, you have to work. You have to be able to turn every rock, you know, to do everything, man, to spend the nights without sleeping, to really accept the risk, eat rock bottom. You have to be, you know, to accept that you are going to lose for a big time, and you need to work hard. You need to be delusional. You have to stick to your plan, man. Backtest a lot and never give up, because it's not easy. This is the hardest way to make easy money, you know. So in the end, it plays out and it's worth it 100%.
And that's FTMO. And there we go. Leo provided lots of valuable insights, so I hope you learned something that you can use for your trading as well. Thank you for being with us, and I'll see you again next time. Goodbye.